What's up, everybody? That's, of course, Church of Eight Wheels, my intro, outro song. Hopefully you're enjoying that. I really do love that song. I feel like it sets the right tone. Folks, this is going to be another episode for the Trading Quote playlist. As you know, I've published 4 books. My new book's out, The Trading Journal. And when I publish a new book, I like to make my last book free. So this is Trading Quotes. Of course, everything's available on Amazon. I'm going through 1 week at a time. There's a quote for every day. I'm reading the book out. I'm explaining it. I'm expanding on it. And there are quarterly reviews. So after, every 3 months, I take my favorite quotes from that first 3 months. So that's what we're going to do today. We're going to do the first quarterly review, which will be super fun. Just to let you know, I did start a brand new playlist called Daily Education. These are 3-minute videos every single day where I give you timeless content. What is a confirmation? What's a 2-level filter? What's an uptrend? I'm explaining some of my tweets, and I'm trying to give you good, easy to digest, short form content. So check that out, of course. Just to remind you, you can find me on Twitter at Big Cheds. I'm on Bitcoin Live, where I'm a founding analyst, and I've been doing a twice a week full market report for the last 7 years, rain or shine. I'm sick. I'm traveling. I'm on vacation. Check that out. And if you are looking for an exchange, check out BingX, my favorite exchange. So what I want to remind you as well, again, if you're just getting started with TA and you're starting to learn how to trade, you got to start with the masterclass tutorial playlist. Okay, this is going to teach you the basics of classical charting, Japanese candlestick theory. This is a wonderful playlist. So check that out. Check out my quick market updates. I'm live streaming here twice a week, Tuesday, Friday, in addition to the daily videos. So try to come by. I'd love to hear from you folks. So we're going to do trading quotes today. We're going to do the first quarter wrap up. My favorite quotes from part 1, okay, which is essentially the first 3 months. Here we are. Traders who forget to use stop losses magically transform into investors. Traders often start out with a good idea, and when it goes wrong, they hold on to the trade instead of cutting it. Admitting that we've made a mistake is incredibly difficult. So what we do is we switch gears mentally, and we try to convince ourselves that we're now investing. We were trading, but now we're investing. And if the price goes down lower, we'll just add some more because we're investing. As time goes on, instead of studying the chart and looking for a trading opportunity, now we're studying chat rooms and news articles. And now we're in a position of desperation. And out of desperation, we continue to look for new reasons to tell ourselves that it's okay to keep holding on to that long position. We're trying to give ourselves permission, right? We're saying we need permission to keep on holding. So you got to avoid falling into this trap, right? When your idea fails, you need to get out. That way that trade doesn't turn into an investment, right? Every time you risk money, it needs to be with a specific idea. It needs to be, I'm in this trade because the $100 level has broken out, and I'm going to hold on as long as the $100 level, price remains above it and my idea remains valid. But you need to decide what your failure point is for every trade and stick to it. So you don't become an investor, You don't want to get into this position where you're looking for reasons to keep holding. You're looking for excuses to keep holding. Be precise. Respect your money. Quote, without careful risk management, I love this one, your portfolio will not survive long enough to learn if your fundamental analysis is worth the paper it was written on, right? You hear that all the time, like, X, Y, and Z is not worth the paper it's written on. Or maybe you don't hear it so much anymore. Maybe it's an old-timey phrase. But the whole idea, right? You have this theory, it should be higher, the price should be higher, the price should do this because there's a partnership. The price should do this because they have some new deal, they have some product. Okay. But how are you managing your risk? If you're putting money into play, it needs to be with proper risk management. just like this first tweet where you're saying, well, I'm long as a certain level holds, right? So if you don't do that, say you just buy in, let me read it first. Proponents of fundamental analysis think that the information outside of the chart is what matters. They believe that they know more than the market does, and the price is wrong, right? The idea that the price should be higher, right? Oh no, this is worth more. This should be worth more. The market's wrong, right? Even though the market's decided a price, the market's wrong, right? Even if this were true, without proper risk management, proponents of this theory would not survive the wild price swings. So even if, for example, it's eventually, going to go where they think it's going to go, there's volatility, it's the price chopping up and down, you could get stopped out, you get liquidated, right? Absent a perfect entry, which basically means unless you get in at the nut bottom, which is incredibly hard to do, the volatility is likely to knock you out before your theory can even be tested, before you can even test the idea that the price should be higher because, they're going to fire a rocket to the moon, or they've got some NASA contract or whatever, right? Just some information that sounds exciting. So no matter how compelling your fundamental theory is, no matter how compelling you think this idea is, this outside of the chart information, you must practice risk management. Pay close attention when the price breaks support or resistance. For example, if you're short and it breaks resistance, adjust your plan accordingly. So even if you think you have a wonderful idea, it's a bulletproof idea, right? You got to have risk management. Otherwise, you won't even be able to stick around long enough to find out if your fundamental analysis is worth the paper it's written on. Quote, the best trading opportunities will jump up and hit you in the face. The harder that you have to look, the more likely it is that you're forcing the action. And so that's such a great point, right? It needs to be obvious. It should be instinctual. Remember, again, we're trading from our watch list. We're trading from our curated watch list, the plays that we've been studying. And when we look at the chart, it should be, okay, you should see it right away. And if you spend all this time looking at it, it's confused, it's a muddled image. There's probably not a real opportunity there for you, okay? So we all know what a good opportunity looks like. And when it comes around, it is so obvious that something just clicks in our mind. And, again, that comes from muscle memory. While waiting for this setup, we tend to stretch things and force the action. A lot of times because we're bored and we crave excitement. So you have a strict criteria for entry, and the chart you're looking at doesn't quite make it. Maybe it has some of the things you're looking for, pardon me, but it doesn't have other things. But because you're bored and you're craving excitement, you're going to stretch it a little bit, right? It's important to adjust your thinking, to change your thinking so you can remain patient, right? Wait for opportunity. And recognize the difference between a boredom trade and a real opportunity, right? A boredom trade is when you're forcing it. Pardon me. A boredom trade is when you're forcing it. Like I said, your criteria hasn't been met, and you just really need to get into the trade, or you really want the trade. And a real opportunity, like I said, it should jump up and hit you in the face. Unless the trading setup is obvious enough to command your attention, move on and keep looking. So train yourself to know when you're forcing it and when it's a real opportunity. It should be obvious. The purpose of a trend line is to illustrate a trend, not a line. This is one of my favorite ones, and people all the time. I guess I'll have to show you what I'm talking about. So, for example, you take a chart, and you have a series of highs, and what people end up doing, and maybe it's a little bit sloppy, and it's like this. What people end up doing is spend all this time debating: do I draw it here? But what about this? Should it really be this way? You need to remember the whole point of doing this is not to identify a breakout level. You're not taking a long on the break of the trend line because you can just follow the trend line down. You're waiting for your second level filter. That's not what this lesson's about. It's that this trend line is, the purpose of it is to show you that there's a trend of falling supply, more aggressive sellers. There's a filter around the trend line, right? So it doesn't matter exactly how you draw the line, this wick, that wick. You generally are just trying to capture the essence of the price movement, the majority of the price move. So the whole purpose of the trend line is you're trying to identify the trend, not the line, okay? Traders love to debate about how to draw diagonal lines. Traders love to debate in general. They argue over whether that line should be drawn based on the body or the wick, or even which candle to use, right? In reality, none of this matters. It's not about the trend, but it's rather about the line. Pardon me, it's not about the line, it's about the trend. Sorry about that. The line itself is not actionable, right? We don't take the diagonal break because you can just follow the trend down. Its main function is to show a general price trend. And this trend is illustrated by a general direction of price movement with a small filter around it. I just showed you that. So focus less on exactly how you're drawing the line and make sure you're capturing the trend itself. You're trying to illustrate a trend. And honestly, a lot of the time, you can see it visually. You don't even need to draw it. Okay, so focus less on the exact line and more on recognizing and trading with the trend that it illuminates. So use it to identify a trend. Don't get hung up on exactly how to draw the line. Okay, folks? There is no such thing as being stuck in a trade. You are simply choosing to remain with a failed idea. This one always hits home to me. You know, it's been years since I originally, put out this quote, and it always sticks with me. So believing that you're stuck in a trade, what it does is it takes away all of your responsibility for making the difficult decision to cut your loss and move on. The truth is, you're in control at all times, as you can always add, cut, or hold, right? You're in the trade and the idea has failed and you're like, oh, I'm stuck. Oh, I'm down 30%. You're stuck because you refuse to take a loss. You're stuck because you refuse to admit that you made a mistake, right? Well, you're never actually stuck because you can always, like I said, you can make a decision. The decision can be that I'm going to do nothing. The decision can be that I'm going to add to the trade. The decision can be that I can cut from the trade. I can cut the trade. I can cut it down. I can cut it completely. You're always in control. You always have an option. And the idea when you say you're stuck is you're giving yourself permission to not even do anything. You're giving yourself permission to not even try, right? You're like, oh, I don't need to bother. I'm stuck. So now you're saying I'm not even going to make that difficult decision because I'm just stuck. There's nothing I can do. It's completely nonsense. There's always something you can do. You are not helpless and you are certainly not stuck. You are in full control at all times, and you must take responsibility for your trades. If your trade plan failed a long time ago, it's time for you to take back control and come up with a new plan. So you entered a trade 6 months ago, and say you're still holding it and it's way down. You know what? You have to come up with a new plan. Here's my new plan. You know what? I'm just going to cut and move on and look for a new opportunity. Or if it loses this next level, then I'm going to sell. You have to do something to take back control. You have to come up with a plan and you have to execute it. And remind yourself that you are not stuck. You are not helpless. You are in full control, okay? This is interesting. Cut your watch list in half, and you'll be surprised at how much better your trades perform. There is a direct correlation, okay? There's a direct correlation. One of the numbers goes up, one of the numbers goes down. So the number of plays in your watch list, if that goes up, your profit's going to go down, right? It's a direct correlation between how many plays you have in your watch list and the health of your portfolio. The health, right? You want a healthy portfolio. You want your portfolio to survive. The reason for this correlation is that you have to drill down on price action to build up that muscle memory. You have to drill down in price action to be able to contextualize volatility. What does that mean? Well, often the best trading opportunities come from volatility. We know that. We've talked about that. And with a watch list that you've studied and you understand, when you get volatility, you can put it into context. You can understand this is just a move back to the weekly EMA 8, or this is just a move back to the daily 50. This is just a move back to the prior level. You can contextualize it, you can understand it, right? And when you focus on a chart and a small watch list, let's say you cut it in half and now it's from 30 down to 15, which is a really good number, 15 plays. You build up muscle memory. This is incredibly important. The muscle memory necessary to understand all types of price action, understand the volatility. With enough practice, you'll be able to spot price movements against the trend. Why is this so important? Your whole purpose, your whole reason, raison d'etre, right? Your whole reason for being a trader is to identify a trend and take advantage of a move against it. An uptrend that's dipped, a downtrend that's bounced, you're taking advantage of a movement against the trend, so you can fade that movement for a profit, right? The larger your watch list, the more likely you are to just bounce around from play to play. You have so many plays, you're just going to try this casually, you try that, and you're going to make ill-informed decisions. This means bad decisions. You can make bad decisions because you're unable to contextualize the volatility. You don't have the proper muscle memory, and that will lead, this is scary, right? Bankroll destruction. Doesn't sound good, right? Bankroll destruction. I don't want that. So reduce your focus to a small set of plays, study them closely, and take advantage of opportunities that they present. The opportunities of your now smaller watch list. Take advantage of those opportunities, okay? Watch your temper. Oh, this is fun. Watch your temper. If your blood runs hot, then your trades will run cold. This one's fun. And it's about emotional management. And first of all, if you're not even like using a trading journal and you're not even being mindful, it's going to be hard for you to even recognize this, which is why, I recommend using a trading journal and teaching yourself to observe your behavior as you enter a trade, as you exit a trade, all that good stuff. So when you're angry, right, and your emotions are running high, it's hard to be patient. And patience is important. And methodical. We want to be methodical. We want to be precise. Harnessing your emotions can be great for other activities, like, I don't know, like art or making music or something, right? Or romance, fine, whatever, right? Harnessing your emotions can be great for other activities, but these emotions can be detrimental to your trading career, right? You just don't be too emotional. Talk about temper, right? When money's on the line, stay focused and dispassionate. You want to have some emotion, but you want to you can't overreact to a loss. You can't overreact to a win. You have to execute your proper strategy. You need to be especially careful when you become angry, right? When you're angry, your ability to remain calm and focused will be most challenged. Anger is so hard to deal with, right? Right? When you're angry, you are going to shortcut yourself. You're going to skip steps. You're mad at the world. You're mad at the market. You're mad at yourself. It doesn't matter. You're mad. It's really hard to be patient when you're mad. I mean, can you do it? I know I can't. And so, if you're watch your temper. If you're mad and your blood's running hot, you're going to have bad trades. Your trades will run cold. And this whole tweet, right? Aim to be neither too high nor too low. It's like it's a Buddhist thing, right? Stay in the middle. If you stay in the middle emotionally and you're not overreacting, it's going to allow you to take advantage of the opportunities when they come along. They will come along. They do come along. And you need to leave your emotions for more creative endeavors like painting or making music or, something else in life that you use emotions with. For me, it's dancing. Cheds likes to dance. So be mindful of your emotions. Use that journal and be especially careful when you're angry. I mean, it's really easy to become self-destructive when you're angry. Embrace the hurt. This is about not giving up, right? Embrace the hurt. Embrace the frustration. Find a way to keep fighting next time and get a few more punches in, right? So it's so easy to get down on trading. It's so easy to get devastated emotionally. And after you take a large loss, right? After a big loss, you can walk down two paths. One path is to let that pain completely destroy your confidence, right? This loss has just taken me off my game. I'm terrible. I'm never going to make it. It's over, etc., right? However, you can use that frustration as motivation. You can use the energy and frustration from a tough loss to find inner strength, right? That strength to drive yourself to study the TA even harder, to study the chart even harder, to read a textbook, to take it more seriously, to do more practice. Use the pain of that difficult mistake. Use it as motivation to improve your skills, right? You have to want to get better. You need to have the discipline to get better, and you have to put in the time. And that tough loss, you can use it as motivation. I don't want to let that happen to me again. So what I'm going to do is I'm going to brush up on my skills. I'm going to go read that textbook. I'm going to work even harder. I'm going to improve my system. So you can walk away, you can let it destroy you, completely give up, or you can use it as a way to get a little bit better, to get a few more punches in. You might lose the next fight, but you're going to get a few more punches in. You're going to let your opponent know, hey, I can get some shots in here to get a little bit better, improve your skills, and next time you can at least stay in the fight longer than the last time. Embrace the hurt, use it as motivation to get better, okay? Now, this is tricky, right? Are these two quotes contradictory? I just said if you had a big loss, you can walk away or you can try to get better. Well, I'm here saying if you just had a big loss, walk away. Trying to make it back in the next trade is a recipe for doubling your losses. So if you can't clear your head, if you are immediately devastated, then definitely take a break. Let the emotion pass away. Let the emotion subside. But then you have to go do the second part of that, which is to improve your skills, which is to go read a textbook, right? So after a big loss, after a huge loss, traders tend to get flushed with emotion and they're thrown off their game, flushed, right? Flushed with emotion, overwhelmed. We've all been there. And at that point, you have no confidence anymore. And only thing you're thinking about is, man, I just destroyed my bankroll. I was doing so well. Or I just started a new bankroll and I want that number back, right? You want to look at the top of the screen and see that number again. If you're completely devastated, because the problem is you may try to make it back in the next trade and that you're on tilt. Definitely do not immediately trade, right? You're on tilt. You have to let the emotions subside. You have to find a way to separate yourself from the pain. You have to find a way to remove yourself from the sting of those difficult emotions, right? You need to find composure and confidence. And then I talked about getting a few more shots in, a few more punches in. This is when you come back and you give it another shot. Once you've been able to get a little bit more composure, once you've added some more skills which help you with confidence, if you go on tilt, you try to make it back right away, it's not going to work out well for you. Go take a walk. Try to shed some of that emotional baggage. This is one of my favorite quotes. It's on the cover of the book, the Trading Quotes book, the one I'm doing the free version of. If you're in a rush to trade, do not be surprised if your money is in a rush to go somewhere else. I think this is super clever. I really want to trade. I'm bored right now. I'm watching TV. Okay, you're flipping through. Oh, this is boring. This sucks. Let me go trade. And you're not trading because there's been volatility and the price is at a key level and there's a genuine opportunity. You're like, I'm boredom trading and I want it quickly. I want some adrenaline. I'm in a rush to trade because I just want to trade, right? It's not because there's an opportunity. And if you think about it, with every trade, there are two sides to the story, right? An impatient buyer, somebody who's impatient, they just want to buy because they want some, or they're wanting to quick flip with no preparation. That impatient buyer is often matched with a patient seller, somebody who bought in lower, somebody who understands the price is overextended and they want to take some profit. Any trade that risks your hard-earned money, okay, respect your money. This is your hard-earned money, and you got to remember, every time you're taking a trade, you're risking your hard-earned money. It should be carefully thought out ahead of time. It should be with a plan. You should be journaling it, why I'm entering it, how I'm feeling. This trade must have a clearly defined thesis and a stubborn stop loss. I love this. What's a stubborn? You stick to your stop loss. The stop loss is when this carefully defined idea fails, right? The whole idea of having a thesis is so you can know when the idea fails, and that's your stop loss. If you just rush in and pull the trigger just for fun because you're bored and you have not defined a thesis, you have not defined a stop loss, what's going to happen? What's going to happen is you're going to send your money to a more patient and methodical trader. Don't you want to be the patient and methodical trader rather than the one sending the money there? You should wait for a good setup to come to you. Be patient. Wait for a good setup, a setup that's so obvious you don't even have to think about it, right? It jumps up and hits you in the face. So slow down, take a deep breath, and think your strategy through before you take that shot. Is this really a good opportunity? Have I prepared for it? Do I understand what I'm doing, what my idea is, and where the idea will fail? Okay? Quote, it's okay to keep making mistakes as long as they are new ones. It's an interesting one, right? Why is that okay? Why is it okay to keep making mistakes? Well, how do you learn if you haven't made mistakes, right? You need some lesson to draw upon. And this is why you need to use a trading journal. And I talk about this. And just one of the sections in my book is why you need a trading journal. And I talk about this. Every time you have a failed trade, there's a lesson left over. There's a residue. There's some information. And the information might be that the breakout wasn't confirmed. I jumped in too early. I jumped in the middle of the channel. I was feeling greedy. I was sloppy. Some piece of information that's going to help you become a better trader, whether it be about the chart, whether it's about a TA technique, whether it's about your own emotional management, your mindfulness, your bankroll management techniques, right? So I'll read this and I'll explain it. The journey to becoming a winning trader is long and hard. I think we all know that. And the best way to survive that experience, again, you have to survive the journey, right, to becoming a winning trader, you have to define your risk at every opportunity, right? Rather than letting the market define it for you. It's your stop loss rather than getting liquidated. When you get liquidated, the market's defined your risk, okay? The centerpiece of this strategy is to avoid repeating old mistakes. Old mistakes are lessons that you've already paid for. You've already lost the trade, and you've got a lesson from that you're trying to learn. If you just do the same thing again, you're already paying for the lesson that you paid for. You're wasting money. There's no point in journaling and analyzing your errors if you just keep repeating these mistakes over and over again. However, new errors are new opportunities. These are new potential ways for you to learn new skills, to improve from your new mistakes. So it's acceptable, right? Because these new mistakes are unavoidable. You've never made this mistake before. You've never done this and that. And these now present you an opportunity. So embrace them. Embrace these new mistakes as a chance to become an even better trader and work tirelessly. Work incredibly hard, put in the effort so you can avoid repeating your old mistakes. Old lessons must be mastered, right? You must avoid repeating your old mistakes, and that way you can survive that long journey to becoming a winning trader. So it's okay to keep making new mistakes as long as they're new ones. And this is what a trading journal is for, my friends. This is very good. Your position size should be directly correlated to your conviction level and familiarity with the play you are attempting to profit from. The more confident you are in the trading plan, the more you should be willing to risk. Every move you make needs to be with conviction, and that level of conviction is expressed by the amount of capital you use. So you need to have a really strong trading plan, and you should think about it this way. If you really have strong muscle memory, if you really are confident with the chart and you know it, it's okay to have a little bit bigger position size. right? The more confident you are in your plan, the more conviction, the more experience you have, the more you understand and know the chart that you're looking at. You can use that conviction to decide how much capital, how much to risk, right? So when you're experienced, be confident in your ability to execute a well thought out plan, right? You can have a really good plan, but without conviction, if you don't have conviction to execute it, if you don't have conviction to believe that you can stick to your stop loss, to believe that you can follow through, then just don't do anything. If that confidence is lacking, sit out the trade. Go do something else. Go back to studying the chart. But if you have confidence, if you have strong conviction, then you can size up a little bit, right? So you should think about your position size as being related to how comfortable and how confident you are with the chart. Listen to yourself and pay close attention to your conviction level or lack thereof, right? Wait until you have both confidence and familiarity, and then pull the trigger. Wait until the chart feels comfortable, till you understand the chart. Okay. All right. And the last quote from this wrap up: fear of losing money is the number one reason you are losing money. It's a really interesting one, right? It's because you can get paralyzed, and there can be a really great trading opportunity that just seems really well designed, but you're afraid to even lose a little bit of money, and you're going to mess up the chart, right? You're going to screw it up. So especially after a series of difficult losses, right? This is really hard because your confidence is lacking. And again, I talk about confidence and talk about emotional mindfulness. That's what a journal is for. You're very likely to become gun shy, right? Which means you're afraid to pull the trigger. Even when a really good opportunity comes around, you're going to stay away from it because you're afraid to lose more money, or you're going to mess up the trade execution. So to avoid falling into this trap, you have to forgive yourself for any trade that went wrong, especially if you followed your plan. You had a stop loss and it hit. Okay, you move on. You had a good idea and you defined your risk. Like, you're not going to win all your trades. Like, get over it, right? If you had a well thought out plan and it failed, okay, try the next well thought out plan. See if there's, and again, look at that trade for value to learn from it. Veteran traders will lose more than they win. They generally have a less than 50% win ratio, right? Because they cut their losers, they hold on to their winners, they take profit from the winners, they're managing the risk properly. They're defining the risk aggressively, which means they don't hold on to losing trades, and the winners more than make up for the losers. So have a good plan, stick to your plan, and keep firing away without fear of losing money. If you have conviction, you have a good plan, follow the plan, and make sure you have confidence. So that was super fun. All right. This is in the Trading Quotes playlists. So as I mentioned, I published 4 books. The Trading Journal is out, right? And since I published a new book, I'm making my 3rd book free. I'm going through and reading one chapter at a time. This is the, first quarterly review. The next video I will do will be, let's take a peek. The next video I'll do will be weeks 14 and 15, and that will come out. I'll do that in like a week or so. In the meantime, I'm doing a brand new series, daily education series. I'm doing 3-minute videos every day, timeless content. Watch the masterclass tutorial playlist to learn Japanese candlestick theory and classical charting. You know me, of course, from Big Cheds and Twitter. I'm on Bitcoin Live, where I'm a founding analyst. I do a twice a week full market report for the last 7 years. Love this team, super proud of that. And of course, if you're looking for an exchange, make sure you check out BingX. Folks, thank you for hanging out with me. Let's finish up with the Church of 8 Wheels. And I look forward to hearing from you folks. Let me know if you're liking these videos. All right, folks, thank you so much. And let's do it. Thank you, everybody.